trying to recognize that future loss accurately. That's sort of the spirit that we're trying to achieve these things in. So that brings us to our last paragraph on net realizable value. Isn't this a beautiful short standard? You got to love it, hey? Short and sweet. So paragraph 33, they just say to you now, listen, you have considered your net realizable value at the reporting date. If any of those inventories are still on hand at the end of next year, please reassess it. And if necessary, reverse it or write down even further. Okay, but remember, those inventories must be still on hand. Otherwise, they just will go through the normal sales, cost of sales process. Okay, right, so let's have a look. I am going to again ignore 2020 for very obvious reasons. We'll go to 2021. I have inventories on hand at cost. Those inventories cost me R1,000. Then I do my research work and I put on my Sherlock hat for a while and I find out what is the net realizable value of those inventories going to be. And we discover that the net realizable value of those inventories is R700. So, being the good accountants we are, we know our accounting system, we are going to do a write down of R300 if I'm doing perpetual. If I'm doing periodic, I'm going to record my inventories just straight up at R700 with the closing inventories journal. Okay, more on that was in the first video we watched. So, this year we will in effect in our statement of financial position have these inventories, whichever inventory system you use, on hand at the net realizable value. And in the Splocky, I want to smile every time I say that name. It sounds like something from Star Trek, Splocky. Beam me up, Splocky. Anyway, so where were we? Cost of sales. I hope you watched all the videos through and didn't miss out on that good joke. I thought it was quite a goodie, but I know you guys have been a tough crowd in class before, so we'll live with it. So there's a situation you'll be living with in your statement of financial position in 2021. Your inventories are at the net realizable value and you have the write down absorbed inside. Remember, cost of sales here, I'm isolating one transaction. There'll be a bunch of stuff going on there. You might have had millions of other inventories you've been selling, okay? This is just isolating the effect of net realizable value for you. There would be other things going on, yes, I agree. Okay, but just to keep it simple while you're focused on this one principle. So then what will happen in 2022? I haven't sold this item of inventories. So it is still lying now, no longer at cost. Let's just say at a carrying amount or at NRV. Let's be really accurate. It's lying there. It's still on hand. Oh dear, Excel. It is lying there. It's NRV of R700. Poor piece of inventories. Nobody wants it after another year. Still on the shelf. Okay. Then we reassess because that's what the ISB says. Now go and look again. If you were going to sell this now in 2023, what would that look like? Okay, and maybe the world has recovered from all this chaos and the selling price of these goods has actually recovered a little bit. And perhaps in 2023, my net realizable value, NRV, has recovered to R900. Okay, great stuff. So what do? We do a reversal. So your net realizable value, if you're doing your journal in perpetual, you're just going to do it the other way around. Let's have a look. So in 2022, debit, credit. I'm going to say here, right, I want to increase my inventories value. So accounting equation, debit side, with how much? R200. Where do we always dump everything else to do with inventories in this blocky? Cost of sales. And there will be your reversal journal, ladies and gentlemen. Isn't that really simple? It's just the opposite way around of the actual write down itself. Makes sense. So that's if we're doing perpetual. Then if we're doing periodic, well, what would have happened at the beginning of the period? Our closing inventories from 2021 would have been transferred to opening inventories in the Splocky as part of cost of sales. Do you agree, that opening entry? So at the end of the period, we just have to take out the inventories left back to the SFP, do a closing inventory journal, but do it at the right amount. So we need to create inventories at R900 because that is their new net realizable value. So that will be closing inventories, which, yes, I agree, is part of the cost of sales line item if you prefer to write that. Okay, so we get the same answer, both of these systems in 2022. So in the SFP 2022, I want to have inventories on hand at 900 Rand, which is made up of the 700 Rand it was last year plus this 200 Rand reversal. And then if we just look at the Splocky side of things, Splocky, won't make the bad joke again, cost of sales, there would be now, I'm going to put it here because it's a credit entry, okay? Do you see it's a credit entry there? Yes, I know everything else will be there, so you'll definitely have a debit balance in total, or debit total, being the income statement section. Okay, but part of that, there would be a minus 200 Rand because we're crediting, remember, we're crediting cost of sales. Okay. So in both of those inventory systems, that would be the answer, perpetual and periodic. That's where we would be lying. And I have just reversed some of my write down. So my last comment on this, is there a limit to this? Let's clear this away while you're thinking about that. Is there a limit to the reversal? We have now got a 200 Rand reversal because it was lying there. Let's think about it. Let's draw the numbers. We have the year 2021, the year 2022, 2023. So in 2021, we had 1,000 Rand at cost. We dropped that value down to 700 Rand. In 2022, we increased that value to 900 Rand. What if my net realizable value had recovered so much in 2022 that I'd be now selling it for a profit again? You can never go above cost. So your reversal would be limited in 2022 to a 300 Rand reversal. Okay, there's a ceiling on it. Because as soon as you go above cost, if we go above this 1,000 Rand cost with that extra 100 Rand, you're revaluing it like you do in IS 16. So we can't do that in terms of what's allowed by IS 2 at this point in time. So again, that's another example, please. And I don't want people to tell you you're wrong to think, but gee, that doesn't make sense. Maybe we should be valuing inventories at fair value. Really, if that's your view of the world, you really, really are entitled to it. And do share it with the ISP. Rant on Twitter and social media. Okay? But at least you're going to have an evidence-based comment that you're going to make. And you're going to say, IS 16 we can revalue above cost. IS 40 we can go above cost. Isn't it time that another major asset standard should be consistent? Because now investors are interpreting measurements on different assets that are all over the show. We have inventories lying at cost or NRV. We have property, plant, and equipment lying at cost or revaluation. We have investment property lying at fair value or at a carrying amount historical cost. We have financial instruments that are lying at fair value, amortized cost. That's not so consistent, is it? So don't lose your view of the world. But remember, IS2 at this point in time, the rules that we have to live with, generally agreed, is we want a conservative number for inventories in our statement of financial position.